Hello, everybody. This is Jason Matthews. Welcome to another episode of MFIS TV. Before we get started, make sure you hit the thumbs up button and subscribe to our channel. Today, we're really going to talk about the State of the Union. Oftentimes, we hear that a recession is going to happen. We hear about a great calamity. And I truly believe that right now, we are in such financial risk as a country that we could see the biggest recession that we have ever seen in our lifetime. Yes, bigger than 2008. And here's a few stats that are very alarming for we can understand it and prepare for it and see where the opportunities lies. Right now in the United States, we have 20, I'm going to keep writing these numbers, these zeros. We have trillions, we have billions, we have millions, we have thousands, and we have hundreds. $23 trillion is our national debt. While back in 2009, 10 years ago, we were at $10 trillion of national debt. So our national debt has more than doubled over the last 10 years. At the same time, U.S. corporate debt has risen to additional $10 trillion. Right? Now, oftentimes people say, how do we get from $23 trillion from $10 trillion in just a short span of 10 years? The simple thing is how we double that is one simple thing: lower interest rates. In 2008, during the last Great Recession, the Federal Reserve lowered interest rates. And the base of lower interest rates is that we're going to say we're going to borrow away and help out banks and other financial institutions. So we have more than double because of that. But more importantly, one thing we having is a growing number of baby boomers. And with the growing number and the alarming number of baby boomers, our entitlements are drastically growing. And those entitlements, when I say entitlements, we're talking about Social Security, we're talking about Medicare and Medicaid. And nowhere in our federal budget is there a plan to fix this gap of $23 trillion. At the same time, because interest rates dropped so low, we have $10 trillion of corporate debt. So companies like Uber, Airbnb, Netflix had took out drastic amount of money because interest rates over the last 10 years have been near 0%. You say, Jason, near 0%? Yes. For them, for corporations, they've been 0% at historical low interest rates. So here's the issue we're going to have, I think, during the next recession. While interest rates have dropped, if interest rates go up, or if credit markets tighten, companies who have this amount of debt is going to be in a world of trouble because if they have negative cash flow. Not companies that have tons of cash like Apple, but companies like Uber who subsidize all your rides. Netflix, who pay a huge amount of David Chappelle but never made their money back on the David Chappelle show. They're going to be in a world of trouble. So when you invest or you put your money away, you want to look at companies that have positive cash flow. Well, you might say, hey, Jason, everything is going to be great. Some of these companies have cash flow, but they might borrow money. But here's the problem. Since September 17th, the banks have borrowed $72.8 billion from the people who borrow money, which means this. Our banks been funding these major corporations with $10 trillion worth of debt they have, which is 47% of our economy. Half our economy is from debt from corporations. They had to, September 17th, which is just a couple months, the banks had to borrow $17.8 billion to operate their daily way of paying payroll, keeping the lights on, paying the bills, while also allowing these corporations to borrow money. We are in a world of trouble when you look at this debt. So what we have to do is we have to properly plan, which means I need to make sure my cash flow is doing well during these times. I need to make sure I have enough cash reserve, because even though this is a downtime for these corporations, if you have your own business, this is the opportunity of a lifetime, because now these corporations want to lay off people, and you can find great talent that's cheaper than you can do now, especially in this very competitive market. You can buy equipment. You can take great opportunities and find opportunities and see where these companies are failing. This is an opportunity of a lifetime if we're prepared. If these corporations taking on a huge amount of debt to do these huge buildings that we see in San Francisco, Oakland, or throughout the coast cities, this might be a great time to get some of that property offloaded because they cannot pay their positive cash flow they don't have. They just want to make this part of our State of the Union. So think about these numbers when you watch the election right now, or these debates, or we're talking about the presidential elections. Right now, the news is talking about Ukraine and impeachment and everything. But one thing we should look at is we need to look at these numbers. How do we fix our entitlements of $23 trillion? What does that mean for us and our households? Yes, we could print more money, but will that cause inflation? Yes, we could keep interest rates at zero for these companies, but these companies have negative cash flow. What is the effects are going to be in for our household? It is time that we plan for ourselves. Now, if you have any questions regarding this, please give us a call, subscribe, once again, to MFIS TV, or call us at 510-229-7608. Once again, we just want to talk to you guys about the State of the Union. Hope you have a good day and have a good night. Bye.